The brunt of the global recession, with debt accumulation reaching higher risk levels. From Cairo, here's Yasser Hakim with more on that.
Egypt has been on a borrowing spree the last few years to sustain the global volatility. External debt has jumped from $145 billion to $157 billion in the first half of 2022. Foreign currency reserves dropped by nearly 20% since March to reach $33.1 billion in August. Egyptian pound devalued by 23% and still falling since March.
Egypt has gone through many crises in the last 10 years. We had uprisings, rebuilding infrastructure, the COVID-19 pandemic, the Ukraine-Russia conflict which led to global supply chain disruptions, and inflation in energy and food prices. This led to loans to cover the hike in import bills and expenditure.
It was compounded by the exit of $22 billion of hot money after the outbreak of the conflict in Ukraine. But Minister of Finance Mohammed Mait quickly moved to ease public concerns, stating that debt ratio stands at 85.3% of GDP in August, in the safe zone below 90%. Egypt has up to 6 months' reserves of strategic commodities and basic needs, much higher than the global average of 3 months' reserves. Egypt never defaulted on any loan and is on a strong footing to pay its dues. And that is owed to a clear borrowing strategy.
There are two pillars. One is to use the loan money to finance projects that yield revenue higher than the loan cost. Secondly, taking long-term loans to spread the burden of repayment over many years.
Experts say officials are now working on increasing income to avoid reverting to more debt.
There is no option except production. We have to make it to the top priority. We spent a lot on infrastructure, and now we have started production such as the 1.5 million acres for growing wheat and cotton, establishing huge modern textile industries as well as petrochemicals. All these are opportunities for investors to establish new projects.
But that's on the long term. For now, Mait announced he will tap the bond market for Chinese panda bonds, worth $500 million to cover the budget deficit. The government is also gearing up for an influx of hard currency from an expected IMF loan and from neighboring oil-rich Gulf Arab nations. Yasser Hakim for CGTN, Cairo.